Okay, picture this like a high-stakes, beautifully animated anime showdown. On one side, you have this sudden, vibrant flash of a geopolitical peace deal actively pulling the market upward. But then, on the other side, there's this heavy, dark anchor of extreme fear and looming macroeconomic threats dragging it right back down. Welcome to This Explainer. Today, we're looking at the cryptocurrency market as of June 17th, 2026, and the data is literally painting a picture of a massive clash between these two totally opposing forces. So how does a market surge on historic news, but still fundamentally drown in fear? Well, let's find out.
We're going to treat today's market action just like a dynamic, vector-animated comic book showdown. The whole landscape right now is marked by these volatile price swings, massive liquidations, and heavy-hitting institutional whales stepping right onto the battlefield. But looming over all of this is our final boss, and this boss could absolutely dictate the entire next chapter for global liquidity.
All right, let's dive right in. Here's our map for today. 1. A market in extreme fear. 2. The peace deal relief rally. 3. Whales, rockets, and tokens. 4. The broken options book. 5. The final boss Kevin Warsh. And 6. Critical levels to watch.
Starting with Section 1, a market in extreme fear. Let's set the baseline. So, looking at the Crypto Fear and Greed Index right now, the number staring back at us is 22. That drops the market squarely into extreme fear territory. But, context is absolutely everything here. Just last week, this exact index hit a floor of 9. I mean, that is absolute panic. So we've actually seen a 13-point recovery in sentiment. It's a slow building of resilience, even though retail risk appetite is still highly selective. Most retail traders are focusing entirely on event-driven altcoins and meme tokens. Because, yes, even in a fearful market, meme coins like Lobster never actually sleep.
But why the extreme fear in the first place? Well, the heavy bearish momentum is very real. Bitcoin has dropped 12% so far this month. Trading volume has completely dried up, literally dropping over 25% in just a 24-hour period. And when selling pressure drops, but the price just keeps falling, that tells us buyers are simply exhausted. Nobody wants to step up and catch the falling knife. The daily chart is broken, sitting below its key moving averages, leaving the market locked in this really fragile state of cautious bear consolidation.
Moving to Section 2, the peace deal relief rally, a massive risk-on boost.
This brings us to a massive, out-of-nowhere external shock. A preliminary peace agreement was just announced between the U.S. and Iran. As a core part of this deal, Iran pledged to ensure safe and free passage for vessels moving through the critical Strait of Hormuz. Looking at this neutrally, the market had been pricing in months of war risk and overseas chaos. So this sudden de-escalation, it provided a massive risk-on boost. Bitcoin briefly spiked above $66,500, and the fallout from that? Boom! Over $150 million in short positions were liquidated. Traders betting against the market were caught totally off guard, forced to buy to cover their positions, which triggered a violent short squeeze. But in true bear market fashion, this peace rally is already being faded as investors lock in their profits.
All right, Section 3, Whales, Rockets, and Tokens, Divergence in the Market.
And this brilliantly illustrates the crazy divergence we're seeing right now. On one side, you have major institutional confidence acting as the strong shield for Bitcoin. On the flip side, you have infrastructural delays acting as a total wet blanket for Ethereum. Investor sentiment for ETH has been notably dampened by news that its highly anticipated Glamsterdam hard fork, which is supposed to finally boost speeds and lower fees, has been delayed until the second half of 2026.
But look at the sheer stacking power on the bullish side of things. Despite the extreme fear and that 12% monthly drawdown we talked about, the whales are absolutely not blinking. MicroStrategy announced they bought another 1,587 Bitcoin for about $100 million. That pushes their total staggering treasury to over 846,000 Bitcoin. That's roughly 4% of the entire global supply. And to top it off, mining firm Mara just added another 1,000 BTC to its balance sheet. This corporate accumulation is a massive foundational pillar trying to hold the line against the bears.
Then we have the narrative rockets. The market is absolutely buzzing with SpaceX's massive $75 billion public market debut. What's super fascinating here is how this traditional finance event aggressively spilled over into crypto through real-world asset, or RWA tokenization. Tokens tied to the SpaceX narrative, specifically Asteroid and SPX, saw these explosive price surges of up to 50% in just a few hours. It really goes to show that when a narrative is strong enough, capital is going to flow, no matter how fearful the broader market is.
Section 4, the broken options book, a massive market trap. Now, what's really interesting about this slide is just how fundamentally lopsided the options market is right now. Following Bitcoin's recent drops, a staggering 80% of the June open interest is currently sitting completely underwater. Think about that. 4 out of every 5 contracts that opened with bullish directional intent are currently losing trades. Only 20% are actually in the money. The core structure of the options book is pretty much broken right now.
Let's put a hard dollar figure on that. We are talking about $8.6 billion in offside exposure. That is not a minor imbalance, guys. This massive wall of underwater contracts acts as an incredibly oppressive barrier for buyers. It means any negative news hitting the market in this super fragile state could trigger these outsized cascading downward moves as all those positions are forcibly unwound.
There's an analyst report that perfectly summarizes this. They wrote, "The burden of proof has shifted. Buyers looking to defend current levels are not doing so from a position of structural strength. The options positioning was already heavily overextended before the price dropped. The structure broke first, and then the price just followed. The bulls are basically fighting an intense uphill battle against an $8.6 billion weight."
Section 5. The Final Boss, Kevin Warsh. The Macroeconomic Climax. Enter the final boss of today's market, the Federal Reserve. Specifically, today marks Kevin Warsh's very first FOMC meeting as the new Fed chair. Talk about a major test. Right now, U.S. interest rates sit between 3.50% and 3.75%. The entire global market, from traditional stocks to crypto, is anxiously waiting for the updated dot plot and economic projections. Everyone wants to know the future path of global liquidity. The peace deal rally was a nice boost, sure, but the outcome of this Fed meeting hasn't been fully priced in yet. Macro sensitivity is literally at an absolute peak right now.
Section 6. Critical levels to watch. The tactical battleground. So the crucial point is, here are the hard, actionable, technical levels defining this battleground. Bitcoin is hanging pretty precariously near $65,000. Overhead resistance is firmly set at $66,496. Bitcoin needs to clear that with actual sustained volume to confirm any real bullish reversal. On the downside, the load-bearing support zone is super tight, sitting between $64,000 and $64,524. If Bitcoin loses that hourly support level on high volume, analysts are pointing to a rapid drop straight to bear target 1 at $62,000. And if the selling starts cascading because of that broken options book we just talked about, the secondary bear target sits way down at $55,000.
And so, this is the ultimate question we're left with. We've got a classic standoff. Extreme fear and broken option structures on one side, countered by corporate whales stacking Bitcoin and a geopolitical peace deal on the other. But it all comes down to the Federal Reserve. Will Chair Warsh signal a dovish relief bid that defends that $64,000 support and sparks a massive rally? Or will a hawkish tone be the exact catalyst that shatters the floor and triggers an $8.6 billion cascading sell-off? The battle lines are drawn. You have the data, you know the levels, now we watch the charts. Thanks for joining me on this Explain.